Hey traders, Raghi here. Welcome to our first week of September, first full week of September Sector Secrets Mastery recap. Of course, this is for the week of the 4th. So Monday we had off, and that left us with, obviously a very shortened week, and also a week where we're going to start to creep into the FOMC decision that is coming up. And that means we're going to be in the blackout period, which is great. That means the FOMC members can't speak. Awesome. So what did we do in this environment that's likely to be prickly, that's likely to inherit some of the August chop? You bet. We continued to short-term trade. This is both timely and timeless, right? This is the type of approach we need for the up one day, down the next kind of mood that the equity markets, the indices are in. And this is exactly the kind of gear we need to be able to shift into for the entirety of our career. So let's talk about what we did. We focused on Tuesday. We focused on and I'm going to just add a little bit more time here. Let's go back 4 days on the 5-minute chart, so we can take a look at what we had on Tuesday. Now, I'm keeping the daily time frame open because as we take a look at each one of these days, ask yourself, where are we in relation to the previous session close? So you can see here, day trading the open on the 5th. We focused on XLE. XLE was a winner for us on Tuesday. JP Morgan ended up being the lone loss. So we end up taking XLE for a winner. IWM was actually a fantastic trade for us. We got short and it just kept right on going. Talk about a let it run trade. It just continued to keep with the red multi-trend, the red grab. These are the basic building blocks of the day trading approach. So monster trade with those 189 puts on IWM. And then our lone loss was was JP Morgan, but we definitely came back with the other 3 trades, XLE, in this case, IWM, and then also TLT. So once again, on the 5th, look at the way in which on the 5th, we just trickled lower. Red grab candles. Look at that. Red. So very nice follow through on Tuesday. That brings us to Wednesday. Wednesday was a little tricky. We only had 2 trades. The first one, we were looking at IWM once again, focusing on any kind of follow through we could get on the Russell. Now, instead of trading Russell futures, we focus on the IWM. I wanted a call. We got stopped out, and thankfully we did, right? This is where we don't want to be stubborn. Neutral environment, green on the open, did not hold support, out, right? Take the paper cut, take the small loss. Take a look at the 160. That means I'm risking, in this case, 40 cents. That's it, right? On that IWM. And then Amazon more than made up for our Tuesday. We went 1 for 2. Amazon taking advantage of the call here on Wednesday, and it doesn't seem like much, but being able to just get a quick bounce, is all we need. We're not looking for brand new highs. Really important lesson. The very first target in our trading is all about managing risk. Today ended up being a pretty darn good day. We ended up with a nice quick pop, and into that on Thursday, we took some shorts in the QQQ. So here's our QQQ, quick boop, down to the downside. That's it. So those 373 or 372 puts did their job. So just a quick move there. And then IWM, same thing. So ultimately today, 2 quick winners. We wanted some other trades. KRE ended up triggering over the IWM. Believe me, it's 6 of one, half dozen the other. If the Russell doesn't come back to you, give the KRE a try, right? So if we can't get a short put, right? So either short the Russell or a put on IWM. If that does not fill, be open to KRE, right? Be open to KRE, and that's exactly what we ended up doing. Moving to break even just after 60 minutes after 11. We're able to take our profit and call it a day. So far, really very much reminiscent of the August action, and that's exactly what we're inheriting as we go into September. Short-term time frames, gang, day trading. And we did have 1 loss. I sent out an Apple trade. We kept a ridiculously tight stop, right? I gave you all a price-based exit as well as a percentage. It stopped out. We closed that trade out. I sent all the alerts for the risk management. Thankfully, we did not get caught up in this, right? This is what I mean by paper cuts, not adding, not defending. This is what defending would have got you, a big gap down right in your face. All right, we want to avoid that. Apple, tiny loss. We'll look to recalibrate and engage some swing shorts. But if we can't, we'll keep with the day trades. I'll see you in the next update.